It's Sunday, February 23rd, 2020. This is All About Your Benjamins, and this is your weekly mixtape and weekend review video. I know it's been a while, and I've said this a couple times. Sports has been ruling our world on the weekends, and I have admittedly been bad about finding the time to fit these videos in. Luckily, last week there was only a couple headlines that I included on the mixtape. Nothing major that needed to be explained. This week I wanted to make sure I hit something on here because there's a common theme and some things I want to make sure we go over. So I apologize for the lack of videos. Working on building out a better way to work in my schedule so we don't miss these and we get them every week, even if there's something's minor. So might start recording these on Fridays or Saturday to make sure that there always will be one on Sunday. But just wanted to share with you why there's been an ebb and flow of videos, and that I'm working on readjusting my schedule to make sure we don't miss these, because I know that a lot of you out there like hearing a quick breakdown. So with that, I'll quit rambling. Let's get to the headlines that may or may not be impacting your financial plan and portfolio. And the first three headlines you're going to see all center around the coronavirus. So we're all well aware of what's going on over in China, and it's spreading to other places like Italy, and the concern is there, the unknown is there, but wanted to make sure we addressed this. So the market was down last week, not a big deal. Markets go up and down, but the reason being cited, and a lot of the reason we saw the market go down, is news centered around coronavirus. More cases being reported, more deaths being reported, videos of people dropping and dying over in malls coming out there, so it spooks the market. Now, I am not going to say that that's not the reason that the market did go down, but sometimes we don't really know why the markets go up and down. We peg reasons in the news as this is why, but it could just be part of the normal cycle. And sometimes the market's looking for a reason to take a little quick step back so that it can run back up. We want to take kind of like a 2 steps forward, 1 step back, or 3 steps forward, 2 steps back, whatever the numbers might be, but the market can't always go up. So sometimes the underlying traders and the underlying theme of the market is looking for a reason to take a step back, to potentially go back forward again, and coronavirus has been part of that. So the headlines are driving that. On top of that, we had Apple come out last week and mention that they're going to miss their estimates because of coronavirus, because of sales, because of production, but they rely heavily on the Chinese consumer market and the China labor market to make the chips that go into the phones and everything. So Apple came out and said they're going to miss their estimates, and that is something that I want to pay a little attention to, not too much. We're not buying individual Apple shares. Apple's in all of our portfolios. If you own a S&P 500 or a large U.S. company stock, you have Apple in your portfolio. So we all are exposed to Apple one way or another, but Apple has always been a leader in the market, especially over the last 10 years. So when Apple comes out and says something like this, investors are going to pay more attention to it. And what we want to see is, do we see other companies mentioning the same things? I think we will. And what is their approach? How long do they think this will be? Do they have measures in place to protect them from unexpected events like this? So hopefully a business is being run properly, has buffers built in, has backup plans in place for when these unexpected events come in. But nonetheless, Apple putting that out there was kind of an eye-catching headline. But if you look at the stock price, it didn't do too much to it. So just kind of is it a canary in the coal mine situation, or is it just something that everything will work itself out once the coronavirus begins to go away? Maybe warm weather will help that. So the final place we saw coronavirus come up was the Federal Reserve minutes came out from last month's meeting, and we saw that it was mentioned, I think it says 8 times, that the Fed in their notes mentioned coronavirus as something that they're paying attention to. But the underlying theme of the Fed was that they're okay with where things are. They believe that inflation will get up to the 2% target. Remember that, we talked about that a lot last year. The 2% target, we're not quite there. It's 1.6 for most of 2019. So they believe that we'll naturally get there, so they don't have anything major that they're talking about. The Fed's been kind of quiet. I think with the election coming up, we may hear more about the Fed. They'll have another meeting coming up where they'll make a determination if they do anything with rates. But right now they've been kind of quiet, and they're just sitting comfortable where things are, which means rates will probably stay low for a while. Speaking of elections, the primary is in full force. We've got Super Tuesday coming up. I hate politics. I don't think that very much comes about it from people talking about politics. It's very polarizing. I don't like the us versus them mentality that we see in Washington that spills down to people, but we are in an election year, and I bring up the election only because we're going to see some headline news, some conversations that may have short-term implications to the market. So I just bring that up. We're getting closer, so we're going to hear more as these debates go on about different things, like we did in 2016. Back then it was about prescriptions and the cost of that, and we saw the impact to healthcare stocks for a short period of time. And so just be prepared for headlines to potentially make some moves within the market. And the only thing I would ask is, as you go forward in your political research and going down the route that you're going to go when it comes to voting, I just ask that you do it in a respectful way. Realize that there are always differences of opinions, and you aren't always right, they're not always wrong, they're not always right, you're not always wrong, and really we can't have compromise amongst parties and people. So don't let the ugliness that we see in Washington and the campaigns spill over into you. There's a very positive way that we can go through this and hopefully come out where things are moving forward, not going backwards. The final thing, final two things. Berkshire Hathaway's letter came out this weekend, and with that, we got to see kind of how Warren Buffett and Charlie Munger did as investors. And the headline says, Berkshire Hathaway stock underperforms the most since 2009. I share this nothing other than if Warren Buffett is the greatest investor ever, or one of the greatest investors ever, and they have underperformance attached to their name, you as an investor should not be surprised when you have your long-term portfolio and that it underperforms as well. Berkshire Hathaway is a very diversified company, much like a very diversified portfolio that you probably hold. So if they're underperforming, there's a chance that you're going to underperform. There will be times where they outperform. There will be times where you outperform. I bring this all up again just to solidify my belief in long-term diversified portfolios. Focus on what you can control, not trying to beat the markets. Focus on your planning, your spending, your savings, enjoying life, finding that balance. So just let Warren's underperformance this year be a reminder that even the best investors don't do better than the market, and that's not necessarily your goal anyway. The final, there's an article in the Wall Street Journal. If you don't have the subscription, obviously you can't read it, but it talks about a CEO of a company who was hacked for a $450,000 wire going out. Now, the hackers out there and the scammers are getting very sophisticated, and they are able to get fake wires placed, and once wires go, money is gone. I bring this up only as an informative piece to let you know that be careful with your emails, be careful with your communication, be careful with clicking links coming from companies that you're not sure who they are. There's this thing called phishing, maybe you've heard of it, but you'll get an email from what looks like it's coming from your bank. They've made everything look like it. It really is not your bank. You click it, you log in, they have your user ID and password, and now they have access to your money. From a financial planning standpoint, from an advisor standpoint, and a firm standpoint, most firms have metrics in place to make sure that wires like this do not happen. So for instance, my firm, we never process a wire off of an email alone. If we get an email requesting it, even if it sounds like the client, we call, we check with them to make sure it's with that. So be careful with that. Silas is at the door, so I'm going to end this real quick before he knocks the camera over. The final thing on that last one is just be careful with your emails. Make sure your financial advisor has a process in place to make sure that that doesn't happen to you. And with that, make sure to hit the mixtape down below. The camera's moving and Silas is in here. Check the mixtape articles down below. Be sure to share, like, all of those great things. And we'll see you in next week's episode. And make sure the camera stays with us the whole time. You say bye to everybody, Silas?
Bye, brother.
Have a great week.